Good morning, everyone. This is Brad Reed. I am your real life trader, and I'm here to remind you to be good. And by good, I mean get out of debt and achieve your financial dreams. Today, I wanted to talk about the gap and go strategy. And so here we are at Real Life Trading website. If you click on day trading, the gap and go, perfect gap and go, and retest gap strategies are all discussed here in class 1, 2, 3, and 4. It'll take you a little over an hour to watch all 4 videos. And that's the best explanation for it. However, I wanted to show you how I do it. So if you come over here, click on articles, I'm going to talk about this article here in just a little bit, 7 steps to building your own strategy. But to get to this, click on articles, come down here below trade setups, there it is. Now, one more neat thing I want to show you, I hope it's neat at least, is on the, if you click on Trade Journal and then go over here and click on this tab down here, it says Brad's Day Trade Plan. I'm creating a place, a public website where you can come and see all of my strategies, videos on the strategies, and examples of when I trade those strategies. So here it is. Before trading any strategy, you should test the strategy according to the guidelines found at, and then there's that article. Okay, if you want to look at how I do my research, there's a YouTube article there. But here I wanted to talk about the gap and go. Again, to identify and learn what is a gap and go and learn what is a perfect gap and go to those day trading videos on the Real Life Trading website, and it'll teach you there. But basically, if it's a perfect gap and go, I look for a 2-minute entry. So if it's if the 2-minute range, so the high minus the low, is less than about 1.5% of the stock price, then my entry is 2 minutes. Sorry, my entry is the 2-minute high or low, and the stop is on the other side. So basically, if it's gapping up, my entry is going to be the 2-minute high, my stop will be the 2-minute low. If it's gapping down, my entry will be the 2-minute low, and my stop will be the 2-minute high. My target one is always 2R. And then for other targets, you can read my guidelines up here. Now, if the 2-minute high and low are more than 1 or 2% of the stock price, or the stock begins to retest, then I watch the 1-minute chart for a reversal. And yesterday, I think I recorded and posted this video by the retest bounce. So this is the strategy that I use if it is if the stock is going to retest. And once I get into a trade, I trail the stop at the swing highs or lows, as mentioned here, EMAs or other support resistance areas. And after about 30 to 60 minutes, I switch to a 5-minute chart. And sometimes after a couple of hours, I'll look at the 15-minute chart, and late in the day, I'll also look at the 1-hour chart. So, but that's how I do it. So let's go look at some examples. This is White Wave Foods Company. This is actually a perfect gap and go we looked at yesterday. This was the previous day, and it gapped up to right where that orange arrow is. So yesterday was a bearish candle. It gapped up. That is a gap and go. I don't have the ability to show it here, but if you click on the 1 hour, the 15-minute, and the 5-minute, you'll notice that all those have the last candle as being bearish in the day before the gap. We were actually expecting a candle that looked something like this one. This is also a gap and go because you have a bearish candle here and then it gaps up. So that's kind of what we were expecting. However, our strategy still worked. 2 minutes went by, and after 2 minutes, we noticed that the high of those 2 minutes was, let's see, 43.88, and the low of those 2 minutes was 43.70. So 43.88 minus 43.70 is 18 cents. It's a $43 stock, so that means 43 cents would be about 1%. So we had a really nice and tight entry to stop, definitely less than the 1.5% criteria. So we executed the 2-minute, we put our entry as the 2-minute high, and we put our low as, our stop as the 2-minute low. And I say that, I should reiterate, my entry is about 2 pennies above the 2-minute high, and the stop is 2 minutes below the 2-minute low. I'll need to change that on my trading journal. At any rate, so we entered here. The stock rolled up, almost hit our target, came back down, and when it formed this swing low right here on the 1-minute chart, We moved our stop up to 2 pennies below this low. Then it did go up to hit our target. And I also have a rule that once I hit 2R, I adjust my stop to break even, and that hence is this stop line. And this stock kind of went sideways for a couple of hours, and then it rolled down. But we still got 1R out of this trade. And as Jeremy Newsom frequently says, 1R keeps the bill collector at bay. So this was a successful trade. Here's another one I'd like to walk through on Verifone Systems. Our good friend Prasad absolutely crushed this one. This was a perfect gap and go. You have a bearish candle here. This candle was March 10th, and it gapped up out of that on March 11th. Again, I don't have the ability to show it here, but if you want to go back to March 10th, you'll notice that the last candle of the day was bearish on the hourly chart, on the 15-minute chart, and on the 5-minute chart. And that's why this qualifies as a perfect gap and go. So let's work through it together. Here are the first two candles of the 1-minute chart. The low of this first candle is 34.44. The high of this candle is 34.59. So 34.59 minus 34.44 is 15 cents. This is a $34 stock, so 34 cents would be about 1%. So our 2-minute range of 15 cents is less than 1%. Actually, turns out to be about 0.5%, but certainly less than our 1.5% cutoff. And basically, the reason I have that rule is if your 2-minute entry, if your entry to stop is more than about 1.5%, that means your 2R target's going to require a 4.5% move of the stock, and that's decently large. And the thought is there's likely going to be a better entry later where you can get a much tighter entry to stop. Once you get over 1.5–2%, your target becomes so far away it starts to get unreasonable to ask the stock to move that much. At any rate, so if the low here is 34.44 and the high is 34.59, this was a bullish gap. So therefore, entry is going to be 2 pennies above the high. So the high was 34.59. Let's put our entry at 34.61. And then the stop needs to be 2 pennies below the low, 34.44. So our stop needs to be at 34.42. So again, thank you, Prasad, for sharing this with us. So let's see what happens as we go. The 3rd minute, it didn't do it. And the 4th minute, look at this. The 4th minute, it actually hit 2R in 1 minute. This is why these perfect gap and goes are so much fun. And then you can see this thing just really took off. It did retest and come back down, but I think Prasad ended up getting 7R on this trade. And I'm not really sure where this thing finally ended up, but you can see when these things move, they move very, very quickly. And that can be a challenge because you have to have super fast fingers to keep up with a perfect gap and go. If you click buy limit instead of buy stop, it can be a disaster, or sell limit versus sell stop, or buy versus sell. You have to be very efficient using your brokerage platform because small minor errors, clicking in the wrong place, can end up being disastrous. So be sure and practice these. And of course, in that article that I mentioned earlier, it tells you how to practice. So perfect gap and goes can be really exciting. They can be really fun. They can be really fast, but they can also be tricky to get into. So one more I wanted to show you. This one was a gap and go. I believe this one was not a perfect gap and go, but it was close. At any rate, we're looking at Smith & Wesson and ticker SWHC, and this gap was on March 4th. You can see the previous day was bearish and it's gapping up. So again, that is a gap and go. If you look at the 1 minute chart, the high here is about 14.43 and the low of the first 2 minutes was about 14.23. So that is a 20-cent move, and we have a 14-cent stock, excuse me, a $14 stock, meaning that 14 cents is 1%. So this 20-cent move was more than 1.5. Actually, it was right at about 1.5%. So we chose to wait because that means our target would have to be ridiculously high. We did get a retest. This thing ended up going bearish for a little bit. So a quick little 4-minute, 5-minute retest. We saw this bouncing signal down here, and again, well, I'll talk about that in just a little bit. So here's the bouncing signal. So we entered 2 pennies above this signal. Our stop was a little bit below this signal, and it hit our 2R target very quickly. This is actually a 5-minute chart, whereas the previous one was a 1 minute. But we actually ended up selling some at 2R, some at 4R, and then we trailed out, I think, somewhere around 3R. So this, again, was a very profitable trade. So those are 3 examples of gap and goes. Again, to learn how to trade a strategy, come check out this article here, which is also located here, reallifetrading.com. Click on articles, and then you can see 7 steps to building your own strategy. And then a while ago, I was talking about the bounce signal. If you want to learn about candle patterns, if you want to learn about chart patterns, there are a series of videos here. If you're new, start here. If you think you're all right, start here. If you're a master of trading, go here. I would recommend you to look at all of these video series because there's important information in all of them to help you be a successful trader. So that's it for me. Enjoy the gap and go strategy. I will eventually post this YouTube video. I'll post this video to YouTube, and then I will also link it on my journal and on my trade plan right in this area somewhere around here. So thank you very much for watching. Have a great day, and as always, trade on logic, not on hope. Have a good one.